Here's the thing about silver that no one's really going to tell you because they really don't realize it. Silver's biggest benefit is also its biggest weakness. How could that be? How could something be its biggest benefit and biggest weakness? Well, that's what I'm going to explain to you. So there's so many different things in life, right, that you can put your money into, whether it's stocks, crypto, real estate, a bunch of different things that you can put your money into. What do they all have in common? Well, typically, especially with the other options, the goal is to grow that money, to grow those funds. With stocking, particularly if you talk to actual stackers versus collectors or quote unquote investors, it's actually quite different. The idea is to keep pace, particularly with things like inflation, things like that, right? Well, I mean, you'll hear that a lot, right, as the stated goal. Now, here's the problem with that. And here's the thing that, again, most people kind of miss the forest for the trees with regard to stacking. Now, diversification is important, but diversification for the sake of diversification really doesn't do much for you. That's for something many people don't understand. You see this a lot with, people who invest in stocks and funds and things like that. They'll look at, a chart and say, well, I need some international, I need some emerging markets and my domestic, and I need some bonds, and I need... No, you don't. No, you absolutely don't. Why? Well, how is that possible? That's portfolio management 101. Well, no, you don't need any of those things if you're not going to actually reallocate and do the hard work of, actual investing. If you're buy and hold, then no, you really don't need any of those things, because the whole point of diversification of any asset, of any portfolio, of anything like that, is that diversification allows you in different conditions to take advantage of your diversity. Hey, real estate's having a good year. Well, you know what? I'm going to sell some of my properties. Hey, stocks are through the roof. You know what? I'm going to take some off the top and I'm going to buy real estate because it's underperforming right now. That is the goal of diversification. That is the whole point of it. If you're not doing that, if you think that because you buy and hold something, that's the way to invest, you're wrong. Plain and simple. Plain and simple. This guy here is one of my favorite coins. Just the detail on it. Beautiful. Perth. Beautiful. But here's the thing. With stocking, the part that gets lost in, the idea, the glamour of, oh, I'm buying gold, I'm buying silver. It's going to keep up with inflation. It's going to do all these things that it's promised you. Maybe, maybe not. But here's the thing. You can get money back. You can get assets back. You don't get the time back. That's the only thing that you don't get back, is the time. And that is the hardest part about silver, particularly silver over silver and gold, is that time is your biggest investment, not your money, your time. Because if you don't end up having the time frame that you thought you would, silver and gold just aren't the play for you. They just are not. Stay away. This is definitely the long-term game. And I'm talking like decade plus game. If anything, if it even works out that way. If not, I mean, it's just a black hole of losing. You're going to pay premiums. You're just going to lose. You're going to lose. From day one in stacking, you are under the 8 ball. You paid more for this than it's worth. 99.9% of the time. I'm sure there's, people out there who've gotten a deal on some bullion and say, oh, this is great, blah, blah, blah. Or they bought in pre-2020. They had a big run up and now they feel like they're gods because, they got a few dollars worth of growth. Good for you. Did you sell at the peak? No, you didn't. You're still holding on to it, thinking that it's going to go to 50 because you're watching, all kinds of garbage about, what silver is or isn't going to do. The key is no other asset really. I mean, I guess the argument could be made with real estate, but the key with real estate is you get some use out of it while you're holding it. You can live in it. You can, grow crops on it. You can do all kinds of different things. Silver, gold, not so much. Not so much. Now, if you're smart, you could potentially, I guess, leverage it in some way, lend it, borrow against it, or do something else. But what are you going to do with the money? You're going to buy stocks with that money? Well, then just throw your money into the damn stocks in the first place. It's kind of dumb. But the key is, this is something that people don't realize, particularly like newer stackers or even, investors, things like that. Silver's best benefit is over a long period of time. That's the time when you're going to reap the benefits. Actual stackers, I mean, they're stacking for the long run, the long haul, 10, 20 years. Oh, I'm going to die. I'm going to hand it to the kids. who are then going to sell it to the pawn shop at, below melt value. But it is what it is, right? Stocks, crypto, you're not looking to hold it for 30 years. You're looking to double it up and get the hell out. Everything is different with other asset classes than it is with metals. And yet, again, it's difficult because the whole sales aspect of metals, the whole, it's going to do this, it's going to do that. All the selling points are over a long period of time. There's none of them that, hey, we're going to double it up. Silver raid, silver squeeze didn't work. All those different things, if they did anything, they harmed the stocking community, not improved it. And this is the big thing, because the best laid plans go out the window, particularly with things like silver and gold. People who've held it, again, for a long period of time, up and down, pre-2020. Take 2020 out of the equation, because those kind of run-ups are not normal, and they are the exception rather than the rule. If you're betting on that, that's what you're doing. You're gambling. Is that likely? Likely to continue to be what occurs going into the future? Probably not. Probably not. And we've already seen that they've come way down from, the peak, which was what, $26 an ounce, and then premiums that were $10, $15 above that on, stupid things like Eagles. These kind of things, when you really take them into account, keep in mind that stacking is probably one of the most boring things you could do if you're actually a true stacker. If you're actually just stacking for weight, it is insanely boring. There's few things that could be more boring other than watching, paint dry. It's ridiculously boring. Now, that's why if you look at the stocking community, so many people transition to being a collector of some sort, a stock collector, whatever it is, paying higher premiums for nicer stuff, whether it's vintage, whether it's collectibles, whatever. Why do people fall down that rabbit hole? And you'll see plenty of stackers who say that's stupid, you should never do that, you should never be wasting your money on metals with pictures on them. Is that true? Because again, if you're really thinking this through and your goal is to sell, the idea is, yes, they're depending on either the coin shop being open to sell their bullion at spot or a little bit over, or being able to sell back to the bullion dealer, perhaps. But the key with the higher premium stuff is, yes, you're paying a higher premium, but you're also opening up a lot more buyers on the back end. People who may not be the coin shop, people who, may be ordinary people who are just interested in having something that's a little different. I don't think too many people, will really think that through. That's a huge benefit, even if it costs you a little bit more upfront. Same thing with numismatics, if they're good numismatics. But this is the thing, the big catch-22 with silver in particular versus gold is gold. Gold will always have a market, but even there, it's not going to be a get-rich-quick. It's not going anywhere. You know what I mean? So you're telling me that my gold jewelry is going to be, worth just as much as your bullion or more because, jewelry has the huge markups. See, it just doesn't make sense. Why am I going to hold bullion then when I could put it into something else that's also gold but has more value? These kind of things, like when you really think them through, make stocking very difficult, because it's not as straightforward as buy a stock, wait till it, doubles, hits your number, and then sell it. Stacking, it's just not going anywhere. If anything, prices may go down significantly from where they are right now back to pre-pandemic levels. If that happens, the true stackers will say, great, back the truck up, I'll buy more. But the majority, I would assume, the majority of people who, purchase metals probably aren't going to be too happy, especially after they were on the high after 2020 about, oh, look at, I was buying in at $12. Look, it's $20 plus now. Look what a genius I am. This is the problem with buy and hold. You know what I mean? If you're buying something, the idea is to have an exit price, to get out, to capture that and do something else with it. Or at the very least, wait to buy back in at a different price, lower price, so you can, increase your volume. But if you're not doing that, what is the point? Again, to relate it back to stocks, you see so many people buy, an international ETF, a bond ETF, a stock ETF, but they have no idea what the hell they're doing, because the idea with that is not to buy and hold. The idea is that as those asset classes perform, to reallocate them over time. Hey, international did really good this year. I'm going to sell some and put it into other things that are underperforming, so that when that has a good year, I can do the same thing. That is the idea. You don't do that with silver and gold. Stackers do not do that. And they're missing out. Again, that's why stacking's biggest benefit is also its biggest weakness.